Hello and welcome to the Small Business Briefing. I'm Brian Kelly, the CEO of the Small Business Association of Michigan, actually coming to you on location at the beautiful, and I do mean beautiful, headquarters of Consumers Credit Union in Kalamazoo.
Good afternoon. Thank you all for tuning in today. I'm Sarah Miller, and I usually have the privilege of giving a little bit of detail about our sponsor, Consumers Credit Union. But today we're joined by Lynn Jarman-Johnson, who is going to share a little bit about Consumers Credit Union and some of the fun initiatives they have going on. So Lynn, thank you for being with us today.
Well, thank you guys so much. We're so excited to have you here today. Our SBAM owner-to-owner event will be happening relatively quickly. And something I think you guys will all want to know about is something that is going on hot today. All right, who all set up their brackets? Who's ready? I understand there's already some horrific things happening in, March Madness. Well, here at Consumers, we've got March goodness. So here's what I'd like you to do. Head on to any of our social medias and you're going to see our bracket, and it is filled with 16 wonderful Michigan nonprofit organizations. By the end of the March Madness, March Goodness Day, I'm talking about weeks from now, obviously, we are going to give away over $10,000. Yes, to nonprofits. And all we need is your vote. Just vote on the nonprofit that you love, and let's see which one trickles up to be the #1 in the country. This is no Cinderella story, people. This is real, and there's no entry fee. We've got you covered. Hey, real seriously though, Consumers is very, very proud to be a partner with SBAM. But you know what we're really proud about? The fact that there's a lot of conversation going on out there right now, and it's all about things happening in the financial markets, and everybody's worried about some things that are going on with insurance and insurance of funding. I can tell you that there's never been an issue with an insurance funded credit union of ever having lost any dollars. And so it's very important. How about you study up on why you should join a credit union? Because I can tell you, we really are here for you, especially for your business or yourself personally. We're here to help you, guide you through any financial questions you might have, but also just know you're safe and secure with a credit union.
Lynn Jarman-Johnson, thank you so much for joining us and for all the work that you do. We see it pop up all over the place and doing good work, doing great work to support the community at large, and we're proud to be associated with you.
And we are too. Thank you guys. Have a great show.
Thank you.
Thanks,
all right,
Lynn.
so this is actually a pretty special show that we have today. It happens to be the 3-year anniversary. Now, the 3-year anniversary is not it's not a fun anniversary, because that we started this small business briefing at the what I'll call the depths of the pandemic, when it was just things changing so quickly, and daily we did briefings at 3 o'clock and connected with just thousands and thousands of people and business owners across the state. But even after the pandemic, we saw some real value in continuing the work. And to honor the 3-year anniversary, we thought that we would invite back as a guest now one of the founders of the Small Business Briefing and my predecessor at SBAM, Rob Fowler. Rob, why don't you tell everybody what you've been up to?
Hey, Brian. Thanks. I broke out my small business briefing swag, and it's interesting. After probably 35 years of talking about small business and advocating for small business, I am one. Wasn't really my plan, but after I left SBAM, I ended up buying a business. The business is Public Policy Associates, Lansing based. We're a public policy research evaluation consulting firm. So still kind of in this public policy space that I've spent most of my career in. It's so interesting that a number of our clients are dealing with either small business development. We have certified development finance or community development finance institutions, CDFIs, and working with college access and some things that we've always cared about as small businesses. So having a ball, but miss the SBAM folks an awful lot.
Yeah, well, the feeling's definitely mutual, even though you're just literally down the street. We don't necessarily run into each other all the time, but it has been fun to distill. It seemed like so many of the important policy work that we do, there we see public policy associates right there involved in it too, and it's just a great long-term company, long-term entity that has really left its mark. So I wanted to, we thought about maybe putting together a blooper reel, but like we have in the past, but we did not do that this time, just partly because it's been so busy. We hadn't gotten around to rewatching and going through, but we had some, there were some tense times, but some really good times. But my favorite quote of the first year was, there was something kind of contentious. There were some people that were being contentious in the comments of our briefing, and you invited them to zip it if you're not a small business owner. And I wish I could pull that off like you did, Rob.
Yeah, it was chippy in the comment section. And my recollection is they were not members, they were not small business owners. They were people who just sort of jumped into a conversation. Actually, we had some, if I recall, some almost obscene kind of people chipping in things, and we collectively decided we needed to try to put a stop to that. And the only way I could think to express that was to zip it.
Well, I think that it worked. Actually, there's a lot of legacies of Rob Fowler at SBAM. But the demeanor of the organization, the approach to public policy, even among contention, is one where we like to be productive, pragmatic, and kind to people, as we and really just expect the same from those who deal with us. And so we'll strive and endeavor to keep that here. Rob, thanks for making a few minutes to join and recognize the 3-year anniversary of something that you founded together with me.
Hey, Brian, don't forget to wash your hands.
And don't touch your face. That was such a, we never did come up with a catchphrase to end after that one, because the washing your hands, great advice, even not in a pandemic. But the whole thing about don't touch your face, like that went away. So my part of the thing, I got out of date. Thanks, Rob. All right, we have a couple of very special guests that I wanted to give some time to on the briefing here to talk about a goal that the governor set a few years ago, which is a real transformational goal that addresses what we consider to be the top issue. Our surveys, time after time after time, with the exception of the of inflation, which has kind of temporarily risen to the top of concerns of small business owners, talent, the access and the ability to find people to meet the needs of growing businesses and a growing economy. That has been the top issue that our members have identified. The governor a few years ago set a goal. It's called 60 by 30. And it's the idea of having 60%, getting to a point where 60% of our population has a degree or industry recognized credential, post-high school education, certification credential by the year 2030. And that goal has been pursued by the development of policies that SBM has been involved in and supported. And but also the Department of Labor and Economic Opportunity has been organized around this goal as well. Actually, a very smart organizational move that leadership in that department and the governor has made to accommodate or to facilitate this type of growth that needs to happen. We have a couple of guests on. One will be new to our audience, and the other has been on the briefing before. So Jonathan Smith from the Department of Labor and Economic Opportunity, and Sarah Sherpicki, who is heading up that 30 by 60 or 60 by 30 goal. So I'm going to throw it over to Jonathan first, and then we're going to set the stage for where Michigan's at with some information from Sarah. Jonathan, thanks for joining us.
Thanks, Brian. It's great to see you and appreciate the opportunity to talk to your members about some of what we're working on here at Leo. So, hopefully folks are familiar with Leo, but just a quick background. The governor, when she took office, decided to consolidate all of the state's economic development, workforce development, and community development functions into one department, with the notion that we can't be successful in any one of those areas if we aren't doing all three in coordination with each other. And so if we're going to create new jobs, we need to have a talented and trained workforce, and we need to have communities and housing capable of accommodating that workforce. And so on the workforce side, we do a lot. I think folks are probably familiar with some of our traditional activity where we partner with Michigan Works agencies all over the state for things like job training and career counseling and job matching services. Many of you as employers may be familiar with the work that we do in partnership with the MWAs, where we work to help upskill incumbent workers, primarily through our Going Pro program, where employers can apply and receive state funds to help pay for some of their worker training programs so that they can get an in-demand credential or community college credit. The other really important piece, as Brian mentioned, though, the state's overall workforce and talent strategy is around educational attainment. And what we know is that all of you need talented and trained workers, and oftentimes in today's economy, that means not just a high school degree. That you need folks with some kind of credential, some kind of certificate, or a 2-year or 4-year college degree. And we also know that helping our state's residents get those certificates and degrees has really good outcomes. It means lower unemployment rates, higher workforce participation, and overall higher lifetime earnings. And so this is a really important program for all of those reasons. And we're really excited that the governor, when she created this bold vision around 60% of our state's workforce having a credential or degree, that she chose to place that office within Leo. Sarah Zerpicki is the director of that office. And she's doing really amazing work all over the state, partnering with our community colleges. She'll talk more about it, but this is a program that we see as a really critical component for economic growth around the state, and we're really going to need partnership, not just from our community colleges and education partners, but from employers as well, because we're really excited about the idea that we can find new and interesting ways to partner with folks in the business community so that they can share the news about this program with their employees. They can make it easy for their employees to enroll and take some classes working around their work schedule to get new skills to help make you all more productive. So with that, I'll turn it over to Sarah, and then at the end we'd be happy to take questions.
Very good.
Thanks, Jonathan.
Sarah, take it away.
I will do. And so I'm going to share my screen, I hope. Can you see a slide now? Or slides? It says 60 by 30. No?
No,
Yet.
I'm afraid not.
Okay. How about now?
Yes, now we got it.
Okay, so Jonathan just gave sort of the high level overview of why the mission is so important, but I'll just kind of echo to say that on measures of labor force participation, unemployment, earnings right after you get the degree, lifetime earnings, health outcomes, sort of on everything we want for our communities, we see prosperity, the good result, sort of increase with educational attainment. I do think it's important to just emphasize that, of course, we're talking about traditional pathways to college, but more and more, this is about being adaptive to our current labor market, which means finding non-traditional pathways for folks who, maybe don't realize that additional education and training can be right for them and can be an opportunity for them. I'll mention that our hot jobs report that comes out, in that the 50 hot jobs in Michigan, all 50 of them require some post-secondary training or experience, and 37 of them require a bachelor's degree. So we know that this is the issue that businesses are talking about, that is the need for skilled talent. We also believe that Michiganders sort of have the talent and the drive, but that we need to see stronger alignment and sort of supports to help people not just enroll in a credential and complete. So we're not going in today to like every single thing that we're doing in the office, but just wanted to provide a quick overview and to talk a little bit about some of the budget recommendations that the governor made that support this sort of critical mission. So we think this hits prosperity for families, for businesses, and for our communities. Let's see. So we asked our partners at the Michigan Center for Data and Analytics to run an update a few months ago on sort of looking at our population and demographic trends. How short would we fall? What would our shortfall be in 2030 if we don't create further intervention around achieving the goal of 60 by 30? And what they found is that the gap is around 150,000 credentials. So that's the delta. That is what we are trying to build strategies around completing. And again, those are a range of post-secondary credentials that are valued by the labor market. So we have been working on the development of a strategic plan. And this isn't a strategic plan that sort of only our office can influence. This is something that really requires really extensive partnership, as Jonathan mentioned, with our community colleges and our four-year institutions, with other education and training providers, with community-based organizations who are interacting with the public, and with employers. I will just mention that of the over 1 million Michiganders who have some college but no degree, we believe most of them are in the workforce. And so finding pathways for those people to stay in the workforce and pursue upskilling and educational opportunities, we think is really vital. And so we know we need that broad partnership in order to find the folks and help them sort of figure out the right educational pathway that's going to be good for them. So this is a set of metrics that really are metrics for the state to be focused on, for all stakeholders to figure out what is our engagement strategy for moving some of these. So we have both a baseline and a goal. That the goal is really for 2027. So if we hit these goals in 2027, this we believe adds up to the change of hitting the master goal of 60 by 30 in 2030. So we need to be focused on increasing the enrollment of our traditional age students. So that's our students coming straight out of high school and enrolling. We also need to find more and more pathways for adults to enroll in post-secondary education. Then we need to increase our success rates across our institutions. So the completion rate at Michigan's community colleges overall is 35% in 3 years. We believe we need to grow that to 46% by 2027. We also need to increase the completion rates at our four-year institutions and increase non-degree credit completion for adults. So shifting now to the budget priorities that we think are really a part of driving the metrics that we just shared. So the governor proposed $140 million to expand Reconnect down to age 21. Especially with the realization that so many people in that age group, really had their educations impacted by the pandemic. And so that would be using fiscal recovery fund dollars in order to temporarily fund that age expansion. We also, the governor also recommended creating a bachelor's degree pathway within Reconnect, again, for people who had their education disrupted by the pandemic. So those could be folks who graduated high school during the pandemic or enrolled in an institution of higher education, but have since stepped out. Again, we think this is really critical and would be designed to really match the bipartisan supported Michigan Achievement Scholarship. And this would just sort of extend that scholarship, which otherwise you're not eligible for unless you complete your high school degree or high school equivalency this year or later. This creates that additional eligibility for that program. The reason it's a bachelor's pathway is that sort of Reconnect is already creating the community college pathway. So this is a supplement to that. Then there's an increase from the $55 million that was appropriated to Reconnect in fiscal year 23. This is just, Reconnect is a growing program. And so this just reflects the increase here of $10 million just reflects the need for additional support to keep running that program. There are also some changes that were made in Reconnect that will make it easier for students and sort of incentivize practices at colleges that will increase completion rates. And we think there's a little bit of a cost to those that we need to anticipate. I will mention that, you know, at this point, and every day this number goes up, we have over 114,000 Michiganders who have applied and been accepted to Reconnect, and over 24,000 of them have actually enrolled in a community college, over 2,000 have earned a credential. And of course, they're mostly working and attending part-time, so we're not expecting a bunch of credential completion yet. You know, Reconnect is a 4-year program. And then we have 2 new programs in the budget. So one is really about addressing student basic needs. So what the nation has really found is that providing financial aid is really important, obviously, for students, especially if we're trying to make pathways for people that don't already have them, but they need additional support in order to complete. Between 40 and 50% of Michigan's college students are estimated to be housing or food insecure. And so we have got to come up with some stronger statewide strategies and supports for helping those people who have enrolled and have shown up and are trying to make sure that they can actually cross the finish line with a degree or a credential. And so that's what we're seeing in the student wraparound and basic needs supports. We ran a small program of basic needs supports this year that will have some really good data soon on sort of what that did in terms of increasing student persistence rates. And then we're also creating a fund, a $25 million fund to help colleges adopt evidence-based practices for increasing student success. This would be for both community and 4-year colleges and universities. So that we can see a speedier uptake of some of the practices that we know will help students, again, get across the finish line. So again, we think this all kind of represents this shift to not only do we need to create the on-ramps for students, but we also need to make sure that we've designed the structures that help them persist. I hope I made it in the allotted time frame, Brian.
That was, yeah, excellent, Sarah. Thank you very much. And and thank you also for sharing your contact information there. So we love it when our members have the ability to reach out. But let's start, speaking of reaching out, let's start with more of a practical question. Obviously, we support all of this stuff that you talked about. And we'll look forward to working side by side as we move through the budget process this spring and advocating for the small business community to advocate behind resources to have more success in attainment, but recognizing that it's degree completion and it's other things too. It's the idea of training and certifications and industry valued and recognized certificates and skills that qualify for this. So it's a really, really wide ranging program, which we love. That makes it more relevant to more businesses. If somebody were looking at this saying, you know, actually I do have, I've got some employees, I'd be willing to invest the time into somebody upskilling and moving on in their career, where would be a good place just to start in evaluating whether or not some of these tools could be relevant to them in their workforce?
I mean, I would just say, I just want to start by making it clear how broad the eligibility criteria are for Reconnect. So if an individual is 25 or over and does not have an associate degree, there are a couple of other criteria, but there are not income-based criteria for enrolling in Reconnect. So for employers to know that the state is really willing to show up there in terms of funding the sort of tuition costs, what I hope that helps to create is opportunities where, you know, can the employers help it, like with book scholarships, right? There are some additional costs that end up getting in students' ways ultimately. And all of the Reconnect information is online at michigan.gov/reconnect. And that's also where people go in order to apply.
Excellent. And so we will look forward to deploying both this briefing our audience here, but our general membership as well, and our advocacy toward resource allocation as we look to support students. And we do love, we haven't, not time today to get into it, but there's a lot of evidence-based research and investigation into the reasons why people have fallen out of whatever process they were in educational attainment. And so the tools that are being brought to bear are really trying to speak directly into those things that set people off track in the past. So we're really proud to work with you and Jonathan and the rest of the team at Leo. Labor and Economic Opportunity, that department is the one that SBAM works more closely with than any other department in state government. And so we really appreciate you coming on and sharing the goals and level setting with us. And hopefully these tools will be well utilized by small businesses across Michigan.
Thank you so much for having us. Thanks.
Thanks, Brian.
All right. So Brian, we have a couple of topics that we have to discuss yet today. The first is a domestic oil project that was permitted by the Biden administration. Can you give us a little bit of detail about the project and its proposed impact on our oil supply?
Yeah, this is one that was a little bit of a surprise. While the Biden administration had in the past pointed out that, hey, there's all these oil drilling permits and oil companies aren't making use of them. That was kind of a hollow statement because a lot of exploration happens. Most of them don't pan out. And but the Biden administration permitted a substantial new drilling operation, $8 billion in the North Slope of Alaska, and it is expected to produce about 600 million barrels of crude over a period of about 30 years. So a long term, and if you look at like our total consumption, even though it's not necessarily on an upward trajectory, expected to be over time. The way supply and demand works with oil and gas, that small changes in supply can do a lot to stabilize prices. So this is a pretty big move, and one that I think signals a different type of different posture approach from the Biden administration than what we had seen in the first half of this term.
All right, next up, the exact amounts of the retirement exemptions for public and private sector employees have been adjusted for inflation and recently released. Can you share what those are?
Yeah, I just wanted to in the law there's exemptions. We talked about how they're being increased for seniors or for retirees, for IRAs, 401ks, pensions, public and private pensions, and but the number gets adjusted by inflation each year. And so I had told you that it would be somewhere, 55 or maybe closer to 60,000 after all the years of inflation are added in up to this year. And it came out to 56,961 for single filers and 113,922 for joint filers. So these are big exemptions. Now, keep in mind, though, that those exemptions will phase in over 4 years. So the way it works is you get 25% of those amounts in the first year, 50% of those amounts in the second year, 75 in the third year, and then 4 years from now, 4 tax returns from now, if you're retired and have those types of retirement income, then you'll get the full exemption. So they're big exemptions, but they do phase in over time. If the status quo of $20,000 and $40,000 in exemptions, if that works out better for you in the first year, which for a lot of people it will, you can still use the old exemptions. So you get kind of your pick of the old system or the new system. But they're big. They're right about where I thought they would be. But I think for most seniors, it makes it pretty much tax free.
All right, and state revenue. So we've talked about how state revenue has surpassed the projections year over year, but now it's actually coming in lower than projected. What is that telling us?
Yeah, well, if you look at February state revenues, and the reason that I look at state revenues is not because, it's not that we don't care about state the state government's budget, but it's like all of that is an indication of economic activity. The state government takes from economic activity, income taxes, business taxes, property taxes, sales and use taxes, all are tied. If they're going up, that means that, those same things are going up out there in the private sector. But the in February, the state's major taxes were down about 10% from what was collected in the same period in February of 2022. So we haven't really seen downward numbers as much in recent years. In fact, been quite the opposite. So they came in lower than February of last year, and actually also a little bit less than projected. So that is, obviously, it was about $100 million difference. Now, keep in mind, the state's budget is huge, like $75 to $80 billion. So we're not talking about huge shifts or huge swings here, but and it's just 1 month worth of data. But it's different enough. I thought it was worth noting as we think about, what direction the economy is going, are things starting to maybe cool off a bit, and lots of crosswinds, a little bit complicated analysis to get through it all. But the state revenue is another indication that at least some things are cooling off as compared to last year.
Speaking of economic factors and crosswinds, you actually took some time earlier this week to film a video that outlines kind of where all these factors come into play. So I'm going to share that in the chat here so that we can, it's a 10-minute video, and I think it's really useful for people to take a watch. So I've shared that here, and I know Andrew is going to share it on Facebook as well. All right, so we have one final topic for today, and it's the banking industry. There's a couple of issues to tie together. So Moody's has downgraded its outlook on the banking industry, and then Credit Suisse, which is an international financial institution, is showing some signs of trouble. In fact, governments around the world are taking kind of swift measures, robust measures to calm fears. So what's that story?
Yeah, so let's just run through these, kind of bam, bam, bam. So the Moody's, which is a credit rating agency, did an industry, downgraded the industry outlook. And so that just means that, if a bank has a problem, the margin for error for when Moody's might downgrade their credit rating is smaller. Okay, so it's just like a signal to the system. You better have your act together. And there were 6 banks in particular. Now there are hundreds of banks out there, but 6 in particular that they are reviewing for potential actual downgrades. So downgrading the industry outlook is not a downgrade of any particular bank. That just says the whole environment, they're just downgrading the outlook. The 6 banks, though, were essentially being reviewed for potential actual downgrades. Now, Credit Suisse, which is a big international bank in Europe, they've had some problems lately. And there was a big investor, a Saudi Arabian bank, that owns 9.9% of Credit Suisse, that had said they're not going to invest anymore. Some investors heard that as they were going to sell their big stake in that bank, which would have sent the stocks plummeting. They later cleared that up and said, no, they're not going to do that. But investors are really, really jumpy right now. So because that bank has had some leadership problems, had a few credit issues, and they had mentioned that there were material weaknesses in their financial reporting. In other words, some inaccuracies or additional information. Everybody's so jumpy, like all of a sudden that bank seemed like it might be in trouble. That's a huge bank. It's way bigger than those in the U.S. that recently had trouble, even though those weren't particularly small banks either. But with credit, what happened was the Swiss government had essentially said they would lend the bank money and to get through their liquidity crunch to the extent that there was one. The bank took them up on that, and they really do seem to have rebounded. That's a pretty aggressive action, for the government to step in and say, no, listen, investors, it's going to be okay. And here in the U.S., the Department of Treasury really has taken pretty aggressive action too, to say that they would lend against bond portfolios. Not every bond that banks have, but certain bonds in their portfolio, they do it on face value that would allow them to get through not have to cash in at times when the investments were down, and also to back with the two banks that failed, Signature and Silicon Valley Bank in U.S., to back all of their deposits. There's probably some moral hazards to doing that. They can't. The government can't take on all risk for private industry. In this case, though, because the markets were so jumpy, because there was, there just seemed to be people looking for a reason to panic in the banking industry when the underlying fundamentals of the industry are actually quite strong. That the government here in the United States and those around the world seem to be taking aggressive action, kind of overdoing the response, if you will, to send a very, very clear message. And frankly, it's probably not a bad idea for them to do that, because the banking industry itself, it's like anything else, is that even if it's strong, if everybody believes it to be something else and there's a run on a bank or on a financial system, it can be a self-fulfilling prophecy that people pulling back or dumping their interests in these types of entities can make it go down when otherwise wouldn't have happened. And so the government trying to express and to demonstrate real confidence in these institutions does so far seems to be calming those fears, and hopefully we can kind of get back to normal, if you will, over the next couple of weeks. We've gone a little bit over here, a lot to cover, but thank you so much for joining, and we'll look forward to seeing you next Monday.
Yes, thank you for being here. Thank you to the team from Leo, to Rob and Lynn, and from Consumers Credit Union. So Brian, I'll let you get to tonight's owner to owner event. See you all here on Monday.